All right, according to some statistical analysis, we've got a lot of major markets across the country that are plateauing in value, slowing down in growth, and actually falling or declining in home price appreciation value or being obliterated in the market. So, welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is the 25th of November. Randy Patrick here, putting the realism back in real estate. Hope everyone had a safe and wonderful Thanksgiving. And oh, by the way, this is the Thanksgiving weekend. So what do we have today is big sales today and Cyber Monday going on. So this entire weekend, I'm offering pretty significant discounts on my training products, stuff you probably want to figure out and get involved with because of what's going to happen in the next little while or happening now. All my stuff is tailored for what's going to happen, what's going on now. So please reach out to me at my email and we'll go from there. I'll tell you what's going on and we can get you hooked up. Okay, guys, so we're going to talk about some interesting stuff today. And the reason why I like it is that there's more information coming in every day that supports where the market is headed, which really is the bubbles bursting, the market's correcting, and we're getting prepped for a crash. So this information came out from John Burns Consulting. The John Burns Consulting Group is a large group that they do a lot of consulting for institutional investors, hedge funds, real estate investment trusts, large investors, etc. So and home builders. So they're out there in the field. They're gathering the data. They're making some assessments on what's happening in all the major markets, and a lot of people pay them a lot of money to give them the down and dirty on what's happening across the country or in various markets. All right. So what, i.e., how, when, what, why, should we buy, should we hold, where a price point's going, et cetera, all that good information. And we've actually talked to some people who are clients of that group. So we've got some great intel coming on. So this is an interesting chart. So this chart basically shows you kind of a cycle of real estate. So obviously everything in the world and life runs on cycles. Real estate's also included. Now, if you participated or are aware of the last housing bubble burst, crash, crisis, we came through a complete cycle from early 2000s into 2008, crashing, troughing in 2012. So we're back at it again. So we've seen a complete cycle, and now we can sort of really predict and figure out how to work with the confines of what's happening now. So the parts of cycles that make sense are, well, obviously the lighter green on the top left is the growing phase of real estate. Once the price points grow, they plateau, so they flatline, then they slowly start to decrease, then they start to fall, then they're at the bottom. They've gone from a peak to the bottom, and then after so many years or months, whatever that is, we'll see some maneuverability, and we'll see some activity, and we'll see that some things change, and now price points will start to move upward as more people come back in the market to purchase. So then we go into the recovery phase. So that's pretty much what happens in real estate. It's boom, bust, recovery, and everything in between. Very interesting here. So we're going to talk about a couple of locations here. So what's plateauing right now is, and again, about 35 major markets here. Please realize that everybody can say, ooh, that's not happening in my market, or my last deal, or my house, or my subdivision, whatever. Please realize that this is a broad analysis based on guys that pull huge statistics. So they're making some broad-based, not assumptions, but statements about the marketplace. Your individual home, street, neighborhood, subdivision may be an anomaly in what we're talking about here, but realize that this is the trend. The trend will eventually catch up and take over those anomalies that you may find yourself in whatever market. All right, so we got Atlanta, Charlotte, Indianapolis, Miami, New York, Orlando, and Tampa. They're plateauing. So so I can actually tell you that, Tampa's not plateauing. We're actually on the other side now. We've already plateaued. We're going down towards the slowing, falling phase now. But realize that real estate always is what? It's based on historical, statistical information and data. Okay, so we're looking at 30, 60, 90 days worth of sales to come up with our comparables, our data, to look at our trends, etc. So realize that some of the markets that may already be ahead of where they're stating they are based on when they publish this and when they look at their data. Okay, so that's the kind of scoop. So Atlanta, Charlotte, Indianapolis, Orlando, and Tampa experienced significant home price appreciation with in-migration, huge job growth during the pandemic. Conversely, higher mortgage rates and slower economic growth have made these locations slow down, have caused buyers to drop out and pause their home search, etc. Miami and New York faced an urban exodus, so people were leaving those locations because of the high price points. So that they actually had an out-migration and a much slower labor market recovery. Population has been returning lately. These markets face really what they call physical supply constraints. Why is that? Well, because limited footprint on where you can build or how much is available in some of those markets like Miami and in New York. So there you go. So that's the scoop on those. The next phase is the slowing markets, all right? The slowing market, we look at places like Boston, Dallas, Houston, Jacksonville, Florida, Nashville, Tennessee, Orange County, which would be just south of LA, Orange County, California, Philadelphia, Portland, Raleigh-Durham, San Diego, Seattle, and Washington, D.C. These are the slowing level, okay? So why are they slowing? Because they have alarming affordability issues and levels. Most homes in these locations are unaffordable to the average or median wage earner, which means homes are going to sit in the market or not move until they reduce price point. Couple that with higher interest rates, it makes it very difficult for the average person, first-time home buyers, median wage workers to purchase properties and live. That's this dichotomy we have in the marketplace right now. So obviously places like Dallas, Jacksonville, Raleigh, a lot of in-migration and job growth, a lot of relocation going on, people working from home, going to cheaper place markets. Obviously, higher wage earners going to tech areas, stuff like that. So basically, the year-over-year home growth or home appreciation in these locations is decelerating rapidly. Construction volumes are pulling back from very high levels like it was before. So that's the scoop on the slowing. So these markets are slowing down as we speak. The last group is the falling. So they've already plateaued, they've already slowed. Now they're actually falling, which means they're picking up the phase, right? And that's characterized by flat or declining prices, limited capital investment, and shrinking house demand is coming into these marketplaces here. What do we have? Austin, Texas, Chicago, Illinois, Denver, East Bay, which I'm going to assume is the Eastern Bay area of San Francisco area, I'm assuming, Las Vegas, Los Angeles, Minneapolis, Phoenix, Riverside, San Bernardino Valley, Sacramento, Salt Lake City, Provo, Utah, San Antonio, San Francisco, San Jose. So these markets are on the decline. Okay, they're actually falling right now, which is interesting. So you've got places like Austin, Sacramento, Salt Lake City. So all standouts for in-migration, robust tech employment demand. They've reversed course quickly. Phoenix and Riverside reversed course quickly, part due to speculative investment that drove prices up quickly. Yeah, so a lot of these locations like a Phoenix area where there's everybody playing that marketplace. There's people relocating from higher price locations like California. Phoenix is like ground zero for basically every iBuyer test market. That's where they typically test out their markets, is Phoenix, Arizona. So you've got lots of iBuyer investor competition. You got people who are migrating in, who were cashing out on more West Coast type expensive properties, bringing their money into town, so causing other things to go up in Phoenix, Arizona. So you can see how that's a location that's actually primed for a big crash. It really is. And we know that there are foreclosures that are increasing in that marketplace right now. So it's interesting to see kind of how this is sort of playing out here. And this is, again, not every city, but this is fairly major cities. This is, the top 35 cities across the board, which these guys are looking at. So when you actually sort of pull down, well, let's go into the outlook. Okay, recovering, demand stabilizing, limited return on capital, growing, rising volumes and prices. You want to jump in that market and catch the wave, attracting capital, fix and flip, rental opportunities. Plateauing, well, the volume growth has slowed down. All right, concentrated in small number of product types and submarkets, like I mentioned. Might be little markets here and there that still perform, but across the board, not a good scene here, right? Decelerating price growth, capital returns are shrinking or assumptions becoming aggressive. Slowing, well, we've got moderate price appreciation compared to peers, modest sales volume growth, affordability and supply levels become alarming, less attractive to capital, falling, flatter declining prices, capital not investing, housing industry shrinking and bottoming, low volumes, good affordability, distressed capital investing. So obviously, as we said, we're moving towards that plateau to slowing to falling in a lot of the marketplaces, and we'll eventually be hitting bottom a few here and there. So there's the two charts together. You can see how the colors work. So nothing at the bottoming yet, and I know we're not there, but we're primed to get there. As I mentioned, we've already had a housing bubble. The bubble is bursting, and we're going through what I call a correction phase now. We're not crashing as of yet. That's to come, and that's probably going to come in early 2023 when everything sort of hits the fan. So be aware of that. That's why I keep telling people, prepare now get involved and figure stuff out because the opportunity is going to be there. So this is, like every other day in housing, as I said, I could make 2 or 3 videos a day on every specific article and topic. Obviously, I choose not to. I don't have enough time for that. Why? Because I'm really busy out in the field getting stuff done, building for this great opportunity that we're going to have in the next little while. Okay, it's also interesting. Little article here saying housing market obliterated. Pending home sales post record drop as deal cancellations, price cuts hit record high. So yeah, pending home sales is actually a statistical index that is produced on a monthly basis by NAR, National Association of Realtors. And what they do is that pending home sales represents signed contracts that aren't closed. So they're future closings that could be 30, 60, even greater days out, again, in the future to be closing. Well, here we go. We've got, so every month they are actually reducing in volume. That index is going down, which means less and less properties are going under contract, which, conversely means in the future we'll see less and less actual closed sale transactions. So when NAR puts out their existing home sales report every month for the past 9 months, we've seen reduced sales year over year, reduce sales because less transactions are happening, which goes right to the pending home sales. Less pendings means less future transactions. You can see in this chart here, I like to always show this chart. They show the green, which is home builder confidence, which of course is plummeting, and home buyer confidence, which has plummeted to record lows. So here's where we're at the marketplace. So there really is there any good news? There's not that much good news. But if you think about it, what kind of good news do we want? I actually think this is good news for the average everyday buyer. If we have low confidence, if rates are high and prices are going to plummet and things are going to sit in the marketplace, that means the market is changing, which means at some point in time things will adjust, which homes will become a lot more affordable for the average person, which is sort of where we want this to go, right? I mean, you can see how the cycle works. It happened before, it's happening again, but realize that it's almost like every month we try hard to beat the previous month's record on confidence and sales activity and stuff like that. I guess we succeed. Information, just because it was simple and easy for me to grab, I pulled this from some of the Redfin stuff. So the Redfin's saying 32% year over year pending sales drop over last month, the largest decline since 2013 when Redfin's record began. Now, the one thing I don't know about Redfin, because I didn't have a chance to look at today, I don't know whether Redfin is actually just taking NAR data and producing and just repositioning it as their own, or whether this is information based on Redfin activities and, in the X number of cities Redfin's located based on Redfin agents and whatever. So I don't know whether the two are different or not. Either way, NAR says it's going down and Redfin says it's going down. So there you go. So obviously you can see pending home sales fell 32% year over year in October, which is pretty significant. That's almost a third of pendings has gone away, if you can believe that. This is even worse. Nearly 60,000 home purchase agreements fell through, equal to a record of almost 18% of homes that went under contract. Home buyers backed out of deals in October, almost 60,000 home purchases. So here's the thing. So if we already have pending home sales that are getting obliterated in the marketplace, and then as time goes on, we have these pending home sales that eventually, guess what? Almost 18% of them back out due to whatever reason. They don't end up closing. So we're getting hit kind of pendings down, and then the ones that are pending, almost 18% aren't going to close anyway. So you can see that really affects the future sales here. And almost 1/4 of homes for sale experienced a price drop, double the rate of a year earlier. So, this is the marketplace right now. Less pendings, people canceling contracts, listings, prices, listings, almost a quarter of listings are doing price drops. So things are moving down the correction towards crash area as far as the real estate's concerned. And I can tell you, based on, what I talk about my intel, because some of the stuff that I talk about or hear from colleagues, connections, whatever, are things that you don't see produced in the mainstream media that I can pick and put on the chart and show you guys. Well, I know that, we all know from all the, prognostications on where housing market's going and potential, devaluation or decline in home price appreciation, value, etc. So I think 20%, devaluation decline is pretty much agreed upon across the board by most people. What we're seeing now is some coming out, some consultant groups, which I maybe mentioned one earlier in the video here, that are basically saying this is going to come at us a lot faster than anticipated. All right, so we're going to hit bottom quicker than anticipated. So, i.e., listen to what I'm saying here, is that if you think that, oh, you're going to wait 3 years, 4 years, pick up a property when it's at the lowest level, think again, all right? Things are happening faster for various reasons that didn't happen in the last housing crisis. So we're going to hit our trough, our rock bottom, probably within about 2 years, all right? So there'll be a lot of great deals to catch on the way down until we get to the bottom here. So again, 24% of prices of homes had a price drop in October. But again, guys, I'm actually sharing this with you to say get off your butts and get going here. Okay. Obviously, new listings are falling as well too. So as much as we'd like to see more inventory, we're not seeing a huge amount of inventory, even though it's increasing, which is a good thing. We're not where we needed to be for a well-balanced marketplace. And the reason being is people are going, well, you know what? The market's tanking anyway. Why should I put my home on the market to have when you put your home on the market, it's almost like you've now got a record, right? Oh, I've listed it for X. So Realtor.com picks it up, Zillow picks it up, whatever. So there's a history of I listed it on November 25th for $400,000, okay? So if things change in the marketplace and you have to drop it to say 325, well, you know what? People see all that. So I know, or maybe you got to adjust later on down the road. So I know what people are doing. They're going, you know what? The market's still actually tanking. So if I'm not really going to sell now, if I put my home on the market, it's going to further tank. Why do I want to show that depreciation and that issue? I'm going to wait to see what happens before I put it back on the market. All right. So again, it's just one of those things where we've had the largest year-over-year increase in interest rates since 1981. We've had a pandemic that pretty much brought the housing market to a halt. And now we're just seeing sort of the remnants of this going, okay, I've just had enough. We had 43% increase in 2 years in home price appreciation. People are tapped out. They can't afford it. They're tapped out. They're emotionally spent in this real estate market, which is kind of sad if you think about it, right? If you go that way. And by the way, folks, if you appreciate the information I provide and my stance on the housing market, if you could please hit that subscribe button, I'd appreciate it very much. Thank you. All right, moving on here, guys. So interesting enough, there's so much to talk about. As I said, I could go on and on and on. I'm trying to keep this as brief as possible, but that's the marketplace here. So existing home sales are crashing at their fastest pace since Lehman. Well, guess what? The monthly decline pushed year-over-year drop in existing home sales to negative 28.4%. Its worst level since 2008, which is when Lehman itself basically folded. Remember, as a result of the mortgage meltdown and all the financial crises that were happening, Lehman Brothers were one of the first major Wall Street firms to pack close its doors and send people out the street with their boxes. Okay, take off, you're done. So we're talking the biggest monthly decline pushed the year-over-year drop. Its worst level since 2008. Okay, so essentially, almost 30% of the home sales are not there anymore, which means the market is collapsing. To go with everything else we just talked about, if you don't believe that we have a change coming up, then I don't know what to tell you. Okay, you're living in your own little microcosm. You can still deny it for as long as you wanted to, but it's actually happening. Virtually everybody has now jumped on this bus of correction. All right, here's the SAR, seasonally adjusted annual rate of homes. You can see that we've gone, this is from NAR information, so we've gone from a 6 million plus 6.3 million SAR number for 2022 to about a 4.3 million. Existing home sales for SAR 4.43 million. So that's about 2 million difference. It hasn't been this bad since COVID of a couple years ago, and of course since the last housing crisis. So we're pretty much tanking. You can take a look at how that chart looks. It's a pretty big drop from the top to bottom there on the far right. All right. The impact is greater in expensive areas, of course, in the country, in markets that witnessed significant home price gains in recent years. So yeah, the bigger they come, the harder they fall. That is true in housing bubble bursting in the marketplace and for housing. It does happen that way. So certain locations are going to lose a lot, and people are going to be crying their blues for sure. Okay, interesting, as I said, a lot of stuff happening in the marketplace that doesn't always make sense. Housing inventory registered at the end of October was 1.22 million units. Unsold inventory sits at a 3.3 month supply, which is a little bigger than the 3.1 in September. So that's good. So as much as we're not at 6 months of supply, which tends to be agreeable as a balanced market, the right number of sellers and the right number of buyers in a balanced market, we're about halfway. They're a little over halfway there. So time will come when people start putting their stuff back out in the marketplace. People are probably pulling off now because no point this time of the year. Wait till the new year hits and we'll see what happens. But we're slowly working our way up the inventory side. Funny enough, our existing home price, our median price actually rose. So as much as we're seeing sales slowing down, the dichotomy is we're still showing some price increases, median price increases, but it's slowing down. So the price gain was 6.6% from this time last year, as opposed to double-digit gains, right? So again, the appreciation is slowing down. So we have deceleration of appreciation. It's kind of an interesting concept of how you say that. So that's the scoop there. So again, existing home price for all housing in October was $379,100 was the median home price. Median means right in the middle. It's not average. It's the middle of all statistics right there. Again, 1.22 million units as far as we're talking inventory is concerned. Realize that there's about almost 1.6 million realtors out there, and a bunch of other real estate agents that aren't actually under the affiliation of National Association of Realtors, NAR, so they can't call themselves realtors, but they're out there. So we probably have 2 million plus real estate agents out there. So we have more than one real estate agent for every listed property in the marketplace, which means things aren't going too well, right? This is just for fun. Where home prices are headed in 2023. CoreLogic, even when this was all happening, they were still holding out saying, guess what? We still see a 7-8% year-over-year increase for 2022 and beyond. Well, guess what? CoreLogic finally came around and said, oh, here's the odds of regional home prices dropping over the coming years. So obviously we've got very low to very high. Very low means a 0 to 20% chance that home values will be dropping. Low is a 20 to 40% chance. Medium is a 40 to 50% chance. High is a 50 to 70% chance, and very high is a greater than 70% chance that home prices will drop in the coming year. So guess what? Everything looks pretty much dark, kind of orange, right? Dark orange or red, whatever you want to call it. And then we have a little bit of the light kind of orange or color there with some medium in there, and then a little bit of low. So guess what? There's no, just to point this out, there's no very low chance. So basically the country has every market in the country has a 20% or greater chance of home prices dropping. Looks like the majority has a greater than 70% chance of home values dropping. Now, why I have to laugh at that is because going back to a few months ago, let's take a look at this. Guess what, guys? Oh, look, this is their CoreLogic analysis in May 2022. Funny enough here, the odds of regional home prices dropping over the coming year. Oh, very low to very high. I only see a couple of locations that have a very high odds of actually dropping. All of them, pretty much everything was very low or low, a couple mediums here and there. So funny how that looks, right? Ooh, look, where's the blue? Oh, all very low in May. Oh, let's go back to the graph in November. Oh, pretty much everything is red-orange. So funny how you've got June, July, August, September, October, November. So in about 6 months, CoreLogic has changed their tune from everything being very low that we're going to see home prices declining to freaking everybody's declining and losing in the next little year. So there you go, guys. So I have to laugh at that. Again, people can only go so long with not realizing or I'm not saying bucking the trend, but not acknowledging what's really going to happen. So these are kind of your last players. What does CoreLogic do? They are highly, highly vested in products and services that support the mortgage and real estate market. So these are groups that would rather the market remains high and people write mortgages and blah, blah, blah. That's their business, their bread and butter, and all the stuff they provide. So they want the markets. They want markets to thrive, not to tank. Now, so even when these guys are like, we got some problems here, well, at least to me it shows some realization is creeping in that perspective here. By the way, if you want my new report, From Bubble to Correction and Crash to Crisis, How the Housing Market Imploded in 6 months, send me an email. I'll fire that report off to you really soon. And again, kind of in closing here, I don't just sit here and chat about stuff for the goodness of my health. I'm actually out in the field doing things, all right? So we're working to build a substantial business we're implementing it right now, and we're actually doing deals. So I want to be very clear here. I don't sit here and talk about it and not. I'm out in the field constantly. I'm actually doing deals. We've got a significant amount we're working on right now. We're onboarding more, and we're increasing our opportunity with respect to the investors we're working with, the hedge funds we're working with, the software we're using, the whole bit. So there are certain things that will be happening in the next little while that's going to happen across the country. So my point is, figure this stuff out. Get on board with what's going to happen. Don't miss it. Okay. I went back and thought about all the things that we didn't do or didn't know better enough back in the last housing crisis, and I basically said to myself, I'm not going to miss out. I'm going to capture or get my hands on everything I possibly can, every angle I possibly can, because this is going to be such a significant opportunity. And again, I'm giving you guys great intel on stuff I'm hearing from, not just because I'm reading a book or an article, because I actually talk to people who are out there who are deploying significant capital and are buying or not buying. I know what their strategies are and how we're going to work with them and support these guys. So we know what's happening. We know where things are going. I want to share that with everybody and give you the opportunity to jump on board and get this stuff done, okay? Because there'll be great opportunity to purchase your property, whether it's your primary residence, income property, fix it, whatever you want to do, at great discounts if you follow the process and you know how to look for it, you know what to do with it, okay, and know how to acquire it, right? And I can tell you that we have a window of opportunity that people like us will do that the big guys won't do how they acquire properties. That's why I'm saying get in now. This is the opportunity. The masses will come back here again. Beat the masses, okay? So again, you guys know what I'm talking about, looking for agents, looking for opportunities. People back 2-3 years ago were emailing me saying, hey, I want to do this, I want to do that. Well, you know what? We really weren't able to because the market wasn't showing its hand. It's showing its hand now. So for all of those of you who reached out a couple years ago saying, I want to buy cheap property, but we really couldn't, now's the time. Re-engage, all right? Let's figure this out because now it's actually happening, and we can all talk about it for years, but the key is actually doing something with it when the opportunity actually arises, which is right now. So guys, thanks once again for the views, likes, comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. I look forward to speaking with you guys early next week. So take care. Have a good weekend.